Happy Sunday, traders. So in this video, I want to speak to you a little bit about stocks and Forex. Which should you trade and why? So let's get right into it. So when I first started my trading journey, it was back in 2018, August of 2018. So I've been doing this for over 7 years now. Still relatively new in the game, I must say, compared to a lot of the guys that I do look up to who have been doing it for over 20 years. And I want to be around here, for many more years to come, providing for my family. And that's what you guys are here to do as well. So I first got into trading and I traded currencies for many years, 5 years to be exact. And then the last 2 years, I've started to day trade indexes and individual stock names. And I've seen much better results in the short term in just those 2 years. And the reason being is because stocks trade a lot more volatile. They provide a lot more opportunities compared to FX. Now, what I mean by that is in terms of the volume and volatility that are traded. So if we come over to some stats here with Edgeful, and I think I was looking at something that's very, very interesting. If you go to the seasonality report, and let's go to a stock like just Tesla, all right? And this is why you'll see a lot of these guys on Twitter, Instagram, and at these big stock traders that are capturing these large moves. Well, let's look at Tesla. We can see in terms of the seasonality report. So this is how they typically do from month to month basis in the last 3 years. We can see multiple double-digit moves here. Negative 18%. Look at the axis here. 9%, over 10%, multiple double-digit moves here. We can even go to a stock like AMD, right? Where, we're even going up negative 18, again, multiple down. The volume is just a lot greater on them. Whereas if you go to a pair like GBP USD, which I traded for many years, look how low the volatility is of here. You don't even get one over 4%. I think the biggest one here is about 3%, 2.5%. So when you are looking to trade stocks or indexes or currencies, Forex or stocks, I highly recommend that if you're a struggling day trader that is only trading currencies, come and have a look at the stock market. They just provide a lot more opportunity compared to individual currencies. Let's have a look at, like, for example, Tesla on Friday last week. Look at the move on this. Overnight, we're down 4%. I mean, if you see a currency pair move 4% in a day, please show me, because I've never seen it in my life before. But let's go to Tesla, and I want to show you like the move on this that it absolutely rips on Friday to end the week. If we can get my screen working, there we go. But look at this. From the market open low to where we close the day is a 5.85% move. Now, in terms of capturing this move, you're going to make a lot more money, than if you are trading a pair like GBP USD. Let's go to GBP USD. Look at that, 0.13%. Look, so there's a saying that goes, and I listen to a lot of S&P Capital stuff, but what you trade is as important as how you trade. If you're trying to trade a currency pair that is moving from low to high 0.5% compared to a stock that's moving 5% or almost 6% in a day, it's a lot more tough to make money. And I think if I can share anything with you guys, is that on this Forex versus stocks debate, if you are struggling trading currencies, come over to the stock market and have a look at trading either the individual stock names like ES and some high volume ticker names like Nvidia, Tesla, Apple, and even some like Robinhood, AMD, SMCI. They just provide a lot more opportunity. So that's my thought process on it. I'll leave you guys with that, and I hope you take something away.